obviously at the end of this presentation. And please, you are also going to get a questionnaire after this workshop. Please send it out because it helps us immensely with doing workshops going forward. Well, I'd like to welcome you to the Veteran Entrepreneur Workshops series. This is the last of the series. We are delighted to obviously be able to offer an entire veteran series with the help of Bank of America. We obviously have 5 bases here, and we have a lot of veterans obviously not here, not just locally, but obviously across the nation. And we welcome all of you and thank you for your service. Today's is personal credit and small business lending. And we're very happy to have Nick Correa, who's our small business banking VP for community service. And there is his contact information and as well as his email. So please, if you want to contact him directly, and there is a QR code. And as I said, you can obviously get that when you get the presentation at that point. And what we're going to be covering is credit and lending options, factors that impact you, and obviously spend some time at the end for questions if there are any more beyond the ones that we've done. And please, I encourage you wholeheartedly to obviously ask questions because that's what we're here for. And with that, I'm going to hand it over to Nick.
Awesome. Thank you so much, Karen. So again, my name's Nick Correa. I'm with Bank of America Small Business. And what I do for a living is really, it's to provide education, resources, and access to capital to small business owners. So I work with small business owners one-on-one and just help guide them through, each step of their business life cycle. Doesn't matter if it's startup or doesn't matter if it's a business running at $8 million a year. I have experience in it all, and really here to help flourish. You'll have to bear with me a little bit. I woke up this morning. I'm so sick. I could barely talk when I got up this morning. So I'm medicated up. I have my Hall's cough drops, and we're gonna get through this. But I appreciate any grace. And if you have problems hearing me, please put something in the chat or speak up. I want to make sure that no one's having trouble hearing me. But access to capital is something that I find a lot of people want to talk about, because not everyone has a great understanding. So what we're going to do today is just try to simplify things, to make sure that we all walk away understanding a couple things. Number one, what options are out there, to access money, whether it's from a bank or a community organizations, like what all is out there and how does it apply to my business? And then 2, how do we prepare to access that capital, right? Because everyone's lending requirements are different, but there are some things that we can all do, no matter what bank or lender we work with, to make sure that we are prepared and we're giving ourselves the best chance to succeed. Karen, you can go to the next slide, please. All right, so the first thing we're going to talk about, again, are just different types of, we call them lending vehicles, or different types of loans or lines that we can get with the bank or other lending institutions out there. So business credit cards is the first thing. It's probably the most commonly used credit vehicle for small businesses. And it's extremely important to know why and how to use them. I am not one to sit here and advocate for credit card debt. I don't believe in carrying credit card debt, but there are ways and there are benefits to you as a business owner to be able to use a business credit card strategically, to make your business run more efficient. Some of those benefits, and one not listed on the slide here, is fraud prevention. All right. If you're out there, I'll give you an example. If you're out there using a debit card and you're swiping, well, the more you use that card, the more that your credit card or your debit card number is out there, and the more susceptible you are to fraud. So if there is a fraud event, what happens? Someone goes out and runs $800 on that debit card. The problem is that debit card is linked directly to the business operating account, right? And so even if you call the bank, you tell them there was a fraud, they do an investigation, you're without that money, that $800 for however many days it goes through the investigation. And hopefully you win the claim or awarded the claim, but it's your money is at risk, right? To where if we use a business credit card rather than a debit card, that business credit card is not directly tied to your operating account. So they go out and spend that $800, you catch it, you call the bank, you put in the claim. Meanwhile, that $800 never left your bank account. You don't have to make a payment on that $800 until the investigation is complete. It's just, you're way better protected using a business credit card than a debit card. Some of the other benefits, easy to track expenses. So you have all your expenses and what you spent your credit card in one spot rather than having to go through and piece a bank statement together with a debit card, which can become very tedious. If you have different employees, you can issue credit cards to each employee, and they each have their own card, and that is separated on your online banking, so you can see how much each individual is spending. So it's not lost in the shuffle. So you have eyes on what everyone is spending on the business. There's also cash rewards programs. For every dollar you spend, you can get cash back, right? And there's business clients that I have or that I've worked with that they'll take a vacation a year on the points or the cash back they've earned on their credit cards. I have one business client I can think of right now that every November, December, they'd come in the bank and they'd take that cash from their card and they'd pull the cash out of the bank and they'd use it to pay Christmas bonuses. And they'd get like $1,000, $1,500 every year in cash back on their credit card that they would use for Christmas bonuses. So there are several reasons to use a business credit card. Another is to help build business credit history. One thing that is very important to understand is personal credit is different than business credit. They're built differently, they're tracked differently, they're scored differently. So it's extremely important to separate our personal expenses from our business expenses, our personal finances from our business finances. And it's very important to not only build personal credit history, which will definitely help you obtain capital, but also a business credit card will help build that business credit history. So there's a lot of different benefits by using a business credit card. And one last one that's not listed on here, another one is cash flow. So what you spend in improving your cash flow. So an example, what you spend today, if you go out and spend $200 on supplies today is, we're in the middle of November, that payment might not be due probably till the end of December. So that's another 45 days you have with that money parked in your business bank checking account rather than it's spent immediately. And so, that could help with your cash flow and other things you're trying to do to manage your cash flow. That could give you a leg up. Some of the things to consider when you're purchasing a business credit card, obviously you want to consider interest rate. Again, I'm not an advocate that you ever pay interest on these credit cards. I always tell my clients, if you're going to get a business credit card, make sure that you pay that balance off, the entire balance off by the due date. That's how you're going to avoid interest. And if you can't be disciplined enough to do that, you might want to not consider getting a business credit card. So it's important to pay these balances by the due date, so we're not having to pay interest. Other things to consider is, does it come with an annual fee? Right? Because not all business cards are created equal. And then, will this report to my personal credit? All right. Typically, you don't want a business credit card reporting to your personal credit. You don't want to, that will impact your personal credit rating. It could impact your personal debt to income ratio when you're going out and buying things like a house. So you want to make sure that ask the bank or the business lender that you're working with, will this report to my personal credit?
Nick, we have a question.
Yes,
If I
absolutely.
am a startup, can I get a business credit card, or how long do I have to be in business in order to get a business credit card?
Yeah, that's a great question. So generally, you are still, even though you're just a startup, you are still eligible for a business credit card. All you need is your business entity created in your tax ID, and you can apply. It's going to go a lot off of your personal credit score, even though it's not, like with Bank of America, we don't report any of our business lending to the personal credit. So that's a win. We still will pull your personal credit to make sure the credit's there, but you're definitely eligible even though you're in a startup phase. And
Thank
again,
you.
hopefully you got my information there at the beginning. Um, email, my email address was there, my cell phone, my whole contact card was there. Hopefully we'll share it at the end too. You'll get a copy of the slide, but I'm here to help. Like I said, I work with business owners one-on-one. And I'm happy to pull up, schedule some time to walk through just where you are in your business, what your priorities are, and let's just see if we have some resources and some things that can help you. Typically, I do. Next business vehicle is a business line of credit. So business line of credits are kind of like really big credit cards, right? And they're really designed to help you manage short-term cash needs, typically for up to a year. Don't have to quite go that long. So any needs that you need the money today, but you're going to pay it back here in the next few months, up to a year. Business line of credit is good for that. And again, they're very, very similar to credit cards, to where you have an approved credit line, you have access to those funds, you can pay, you can swipe a card, you can transfer money out of the bank account, you can get the cash from the bank. But you have to obviously pay that back, and interest gets charged daily. The benefits of the business credit line, they're used a lot for companies that operate with a large amount of receivables. And so receivables, if you're sitting there and you're not sure what a receivable is, if you provide a service or a product for a customer, and you provide that service or product today, but then you give them an invoice and that payment is not due for 30 days, 15 days, 45 days, that's a receivable, right? And so there's a lot of businesses that have a large amount of receivables. Business credit lines are good for helping manage those short-term cash needs that the receivables cause. Also, it's good for seasonal businesses to help bridge cash flow gaps. Working capital when you need it. So if large expenses arise from time to time, might be good for those. Some things to consider, that you have a secured or an unsecured credit line, meaning secured, meaning there is some sort of collateral that it's tied to, unsecured, meaning there is no collateral. Typically, credit lines will have an annual fee and an origination fee. So you want to make sure you consider the dollar amount for that. They will also carry their interest rates are typically variable. They're going to change month to month depending on the current market. That's very normal. There's typically not a lot of any fixed rate, at least none that I know of, fixed rate credit lines out there. They're typically variable depending on what the market is and can vary month to month. And there's no fixed payment schedule, meaning, you purchase something on a credit line. Now all of a sudden there's no plan to where, like, all right, you make this is the minimum payment and it's going to be paid off in a year, or 2 years. There's no fixed payment schedule on that. Typically, the payment due for the month is an interest-only option, and you're not really paying enough to pay it off, right? At least if you're only paying that minimum payment due. So that's something to be aware of. It's nice because it can give you the flexibility, right, of having that really low payment, but you have to make sure you're disciplined and pay it off in a short, reasonable amount of time.
We have a
And
couple
then,
of questions, Nick.
yes,
What are the
uh,
credit requirements for a business credit card and a line of credit?
um, I'm going to assume that question is for Bank of America because it is important to understand that not all banks are created differently. So Bank of America's guidelines are going to be different than Wells Fargo's and different from other lenders. We all vary in our credit requirements. For a business credit card with Bank of America and a credit line, typically our minimum credit score, personal credit score is 680 is what we're looking for. What other questions do we
Are
have?
there any other requirements besides a credit score as far as, time in business and the like? We mentioned that business credit cards you can do for a startup, but for a line of credit, do you have to be in business for a certain time frame?
Yeah, that's a great question. So typically, with Bank of America and I'd say the majority of lenders with the business credit line, they do like to see you in business for probably 2 years or more, because most businesses or most banks are what we call cash flow lenders, meaning they want to see that the business has established cash flow and has the current cash flow to be able to support the new business debt that we're taking on. And so with a business credit line, that would fall into that. That typically we want to see a business owner in business for 2 years and be able to prove that currently in the last year or two that the business has the cash flow to support the new debt service.
And again, I understand this is Bank of America. Do they take financial statements, let's say from QuickBooks versus tax returns? What are your requirements to prove your 2 years of business?
Yeah, we typically ask for a couple years, 2 years of tax returns, 2 to 3 years of tax returns. And we also like to see current financial statements, so current income statement, balance sheet. And then we have some forms like a personal financial statement to fill out. But kind of all of those.
And those are usually typical just for the attendees of most banks. That's
Yes,
not
very typical. You're going to be
very
hard
typical of
pressed.
any bank.
You're going to be hard pressed to find a bank that doesn't have these similar requirements.
Okay. And this is an interesting question, but I don't know if you can answer it, Nick, but I will try if you can't.
Yeah.
Which banks are more flexible with startup businesses?
Yeah, it's a good question. Most banks typically aren't too flexible with startup business, big or small. I would say your smaller community banks are probably a little more flexible and can work with you a little bit more in the startup stage, and the bigger banks a little bit more conservative in that area. That's kind of a general rule of thumb. But we'll get into it in a minute. I'm gonna in a little bit, but I guess I'll talk about it now. There are they're called CDFIs, Community Development Financial Institutions. These are in all markets. We have some here in the Low Country. These are lending institutions that are set up. They receive funding from different federal dollars and private investors and SBA money. They get money from a lot of different areas with a mission to invest those dollars into the communities that they exist. And they're generally established to capture that early stage small business client that the banks are not really looking to do. And so there's a lot of good CDFIs out there that help early stage business owners. Bank of America is the largest private investor for CDFIs in the country. We have, I think, $1.7 billion invested in the CDFIs. So it's not that we don't care about early stage business owners. We do. We typically we don't take that risk, but we invest the money in the CDFIs that will take that risk. So if you are on the call and you are interested in learning more about, you have some capital needs and you're not 2 years in business, reach out to me. Let's have a conversation and we'll see if we can connect you with the right institution for whatever your needs are.
That's great, Nick. And I agree with you 100% that is the smaller banks are a little bit more obviously in tune to startup businesses, but any bank, honestly, beyond a credit card, if you're talking about a line of credit and some of the other things you'll be talking about in a minute, they're going to want to see obviously that you have a viable business with an actual P&L and cash flow. I also would say always start with wherever you might have a bank account right now, because at least the person there. So they see what's in your bank account, and this could be a personal bank account or where you've set up your business bank account at the end of the day. And yes, CDFIs are great. We've had as SCORE mentors great success that when we talk with many of our startup businesses, and quite frankly, we are referred by banks to us because the bank can't help them because they're not 2 years in business. We will obviously then look and see what we can do with some of the CDFIs we partner with. So if reaching out to Nick, I agree, is a great part of this, as well as reaching out to your local SCORE, obviously, chapter, and they could help you obviously put you together with somebody. So yeah, that's it on the questions, Nick, for now.
Great, thanks. One last thing on the credit line, and we'll move on the business credit line. They are typically reviewed annually, meaning the bank will review your financial situation every year, review how the line of credit's being utilized, and if you continue to qualify, they will renew. But they want to make sure, because it's an ongoing open line, that it makes sense for all parties. Business term loans are often used to finance the purchase of assets or to finance business expansion over a period of time. In layman's terms, you generally don't want your term loan, like the term, how many years you're paying, to be much longer than the life value of the equipment or the thing that you're purchasing. For example, I'm gonna use auto loan as an example. You don't want to have it. Banks don't do 10-year auto loans, or you don't find the dealerships doing 10-year auto loans, because our cars we're typically not keeping our cars that long, right? We run our cars, we get over 100, 150, 200,000 miles, and then we get another car. So we typically only keep cars 5 years. So because of that, the term of those loans typically matches how long we keep that asset. So you never want to be in a situation where the term is way longer than the life value, the lifespan of that asset that you're purchasing. The nice thing about term loans is you can generally get fixed interest rate options and not variable. There are variable term loans out there too, but at least most banks will do a fixed rate option, which is nice for a term loan. And then you have a predictable payment schedule. You know how much you're paying every month for how many years, and when that is going to be paid off, and when you will no longer have that debt. And that's important when you're running a business and you're trying to strategize your cash flow and what's coming in and what's coming out. These can be secured or unsecured, and typically will have some sort of small origination fee or other closing costs. Any questions on the term loans?
Not right now. We can
All right, I'll switch to the next slide, please. I'm going to try to go a little quicker pace. so we can get through all this stuff because we have a lot of good things to talk about. SBA, Small Business Administration loans. So the SBA, they do loans. We've all heard SBA out there. But you don't get the loan typically directly through the SBA. Most major banks or a lot of lenders, they work with the SBA, and the banks or the lenders offer the SBA lending through the SBA. So you work with the bank or the lenders to get there. There's some reasons why we do SBA loans. They can give higher loan amounts for financing. So where, with like real estate, right? I mean, with a real estate loan, typically the bank will want 20% down. With an SBA, you're probably only gonna need 10% down, right? So the SBA allows you to get larger loan amounts compared to the cost of what you're purchasing, lower down payments. They can be a little bit more flexible in their guidelines, so easier to qualify for. And the terms are generally longer than your normal small business loan. When I say the terms, I mean the length of time to pay it back is typically longer than most loans out there. There's 3 types of SBA programs, or at least 3. There's a lot more than 3, but 3 core SBA programs. The SBA 7A loan, which is cash. Really, it's for general purposes. So it could be startup, it could be expansion, it could be real estate with tenant improvements, it could be for equipment, all these general purpose. And that's capped at about $5 million. The next is the SBA 504 loan. That is commonly used for and only used for commercial real estate and large equipment. And then the third one is SBA Express. SBA Express are smaller loans capped at about $500,000. They're often used for equipment, working capital, and some smaller owner occupied real estate, so commercial loans.
Nick, there's a question. Does
Yeah.
SBA also require 2 years in business?
No, that's a great question. No, they do not. Because SBA does startup lending. But you have to have your ducks in order, and you still have to prove your ability to make money and repay the loan. But no, SBA does not have that 2-year in business requirement.
Yeah. And I'll just add to that is they really look at cash flow and potentially collateral for this if you aren't in business less than 2 years, which is a very important criteria. So, if you don't have any income or cash flow and you don't have other sources of income, let's say another business at this point, obviously, an SBA, it's going to be a challenge for the SBA as well, besides any other bank. And that's it on the questions for now.
Yep. Yeah, we can go to the next slide then. Thanks, Karen. All right. Just a few other ways to access capital. Commercial real estate loans, we've already talked about. You have conventional options and SBA guaranteed options. Again, the conventional loans generally require about 20% down. Sometimes they'll have a balloon payment. They'll go out to 15 years on the term, sometimes 20, but that will carry a balloon payment. Where the SBA, generally 10% down. SBA will go out to 25 years. SBA is a great option for commercial real estate. Equipment loans. So you have loans that are used just to purchase equipment, general purpose equipment, commercial purpose vehicles. And one of the really commonly used equipment loans out there that sometimes we miss are business auto loans. business auto loans can be a great thing. So if you're in an industry like where you have a business vehicle and that vehicle is dedicated to business, and met with your tax advisor and they've told you, yeah, it's okay to call this a business vehicle and get the write-off. Well, that's nice, but you can also finance that in the business name. And so the great thing about that, the huge benefit to financing that in the business name rather than going out and getting a personal loan for that vehicle, is it doesn't report to your personal credit. And so, we're in a time where these vehicle loans are these vehicles are expensive now, right? I mean, your average payment's like $800 on a vehicle. So by having that in the business name in the business credit rather than the personal credit, that's $800 a month that is removed from the personal debt to income ratio. So that could help you on your personal side as you go try to buy a house or other things, not having that $800 debt. So business auto loans is a great one that we miss. But your equipment loans often come with terms. They're shorter terms, again, to match the life of the equipment, 5 to 7 years, unless you go with like an SBA Express. SBA can extend the term up to about 10 years. And
Nick,
then practice loans. Practice loans are, go ahead,
we got
Karen.
two questions before you
Yeah.
move on. With an SBA commercial real estate loan, if the property has apartments that can help us qualify the same, is it the same way that a residential would? Meaning that
Um,
the commercial property has rental income from apartments, would it help qualify for the loan?
it could. It could.
Okay.
It could.
Second,
It's a one-off situation. There's so many different factors to these situations, but I guess the best answer I can give you, where we're not getting ourselves in trouble, is it could, but we'd have to look at so many factors in that situation, but it could.
okay. And then based on what you said about auto loans, if we were looking to start a business in the auto industry, being car rentals, can we start by applying for a business auto loan?
Yes. Yes, you can. Typically with these auto loans, the ones that I was referring to and speaking about, they are generally for business vehicles that are not going to be sold, though. So most banks will cap you. Because of that, they'll cap you how many business auto loans they'll give you. So if you're looking for business auto loans for an entire fleet of vehicles that you're going to turn around and sell, this particular business auto loan probably wouldn't be the best avenue. I mean, it could work and you could get away with one or two, but it wouldn't be a long-term solution to running your business.
And then last question is, would a commercial truck be considered under a business auto loan?
It would not. Well, it depends on what the commercial truck is. If we're talking about, like a big dump truck or a semi, then the answer is no. If we're talking about like a Ford F-250 or something like that, then yes, it would. So, but even with a commercial vehicle, if it doesn't qualify for the business auto loan, we do have commercial vehicle lending as well that we can take a look at.
Yeah, this person qualified it. It's an 18-wheeler, so it's a big truck.
Yes, and then that would be, it would not be a business auto loan. It would be a commercial vehicle loan.
Okay, and we can continue.
Great, thank you. I'm going to just high level on practice loans. Practice loans are for healthcare professionals, so doctors, dentists, and vets will typically be able to get up to 100% financing to start up their practice acquisitions. They'll do buyouts, equipment, medical healthcare professionals. Generally, there's a lot, they're pretty capital intensive. They need a lot of capital to get those going. And so there are specific loans out there for practice professionals. You can move to the next slide, Karen. Couple things we're just gonna the high level cover. We talked, the first is the community development financial institutions, or the CDFIs. Again, you can reach out to me and talk about your situation. Of course, you can call Karen, but understanding your situation, CDFIs are lending institutions that are really made to provide lending to businesses or people that traditional banks are not going to lend to. They're great. I can't speak highly enough about my CDFI partners in the community, and they definitely add value to the small business ecosystem. The minority business development, these are, and I'm bringing these up because these are all different avenues other than a bank that you can look to access capital from. Banks obviously where we normally typically first turn to, but there's others. So the CDFIs is one. Minority Business Development Agency. This is part of the United States Department of Commerce. And it's solely dedicated to helping diverse-owned businesses grow. So they have some capital resources. If you need a website, I can give you a website, or just Google Minority Business Development Agency. It's a government agency. Local and regional funding. So any type of grants by the local and state government. We have at Bank of America, it's called an Access to Capital Directory for entrepreneurs that are looking for capital. You can search what capital is offered in your area, and it will give you CDFIs. It'll give you grant options. It'll give you banks to work with. It'll give you venture capital. Sorry, I muted myself. So there's a lot of different options out there. And if you're interested in this access to capital directly, again, reach out to me and I can provide it. But it's a great way to start to look for the capital that you're looking for. And then grants, we all know that there's grants out there. Grants.gov is a centralized website. Federal agencies post available grant opportunities for grant seekers. Any questions, Karen?
No questions now. The only thing I would add to that is do keep in, for those on the call, because one of the questions we get at SCORE all the time is what grants are out there. There are grants out there, but they're generally small in nature, maybe 5,000, maybe 10,000. So they're really meant for like very specific purposes, like you have to buy some equipment or you have to set up a website or whatever. But the other thing, going back to both the CDFIs and any of the developmental agencies, you really need a business plan. You really need to have your ducks in a row and be able to prove to them, what you're doing, your competition, your pricing, and where your income and P&L is going to look like. Without that, they probably won't even, obviously you won't get to the first base at that point. So I would just, again, encourage you to reach out, obviously, to your local SCORE chapter who can help you develop that business plan and contacts and see what they're doing. I just got one question for you, Nick.
Yes.
Buying a 6,000-pound vehicle with an LLC and writing off 100% after 1 year. What are the requirements, pros and cons?
I wish I could answer all of that. I'm not a CPA. But I would say generally writing it off all in 1 year. The pros would be you get 1 year write-off, right? I mean, you want to make sure you're in a position to where you need that write-off. Like, what if you don't need that entire write-off? Again, I'm not a tax consultant, so I don't want to get too detailed in the answer to that question. But I think that I don't think that you can write off a loss or the negative amount. I think the write-off will only benefit you if you're showing a profit. So if that takes you into the loss category, I don't think that will help you from a tax standpoint. So in that case, if you're not making a profit or your profit is small to where you're not able to take that entire write-off, you're probably better off spreading that write-off out over several years, so you can reap the benefits each year. Even though that's my That's my
Mm.
thought. I don't want to get too much into that because most of that's a tax question, but hopefully that gives you a little bit of something.
I agree with Nick, is that, really, this is a tax question. You got to talk to your tax accountant and based on your P&L. Obviously, your write-off for your on your P&L obviously doesn't factor P&L that you might be given to a bank, but obviously it's all depreciation. But again, it goes back to your bank term for that particular vehicle. If you're going to finance it, I don't know, is different than your write-off from a book standpoint. So
Yep,
two different scenarios, two different things, but this is really a tax question at the end of the day. So,
yep, good.
okay.
Let's go on to the next slide.
Yep.
We're going to talk about, so we talked about the options, what credit is out there, what are banks offering. Next, you can go to the next slide, Karen. We're going to just talk about the factors, like what are the banks looking at? So I have like 5 different slides here, but we're going to spend most of our time because we have 17 minutes left for this. We're going to spend most of our time on this slide because this really captures everything, right? That we need to talk about when we're talking about factors, the factors that the banks or the lenders are considering when reviewing your lending application. So I do a lot of presentations solely on this topic. So the universal term is called the 5 C's of credit. All right. Bank of America has added their own C. So we've added a 6th C, which is the last one, communication. But these first 5 C's, this is not a Bank of America thing. This is an industry thing that's been around for ages. These are the factors. This is what the banks are looking at when determining whether they're going to lend to you. Now, we all have our different guidelines. We all look at them differently, but it's so beneficial to you if you really understand each C, because it helps kind of train your brain that what the banks are looking for, and it gets you in a mindset on how to prepare for those conversations or for those meetings with lenders when you're trying to access capital, and how to prepare for them. So the first C is capacity, and we've already talked about it when we talked about 2 years in business and the banks want to see 2 years in business. Why do we want to see 2 years in business? Is because the bank wants to be able to look at all the numbers and show and get a warm, that warm fuzzy feeling that you have the capacity, the ability to repay the loan, that the bank, that your business is making enough money to repay that. We all have our slightly different variances of a formula for this. So that's why, like with a startup, how do you prove capacity, right? How do you prove that you're able to repay the loan back? Well, to Karen's point, business plan, right? If you don't have 2 years in business and you're in the startup phase, your business plan and your projections, your financial projections in that business plan are going to become vital for you being able to get a startup loan somewhere. Vital. So make sure that you contact a SCORE mentor if you're in this boat, because you're gonna want help putting that business plan together. It's just an important piece. So capacity, with a mortgage on the personal side, we go out and buy a house. We've all heard the term debt to income ratio. That's been thrown out a lot. So that's used on the personal side, but on the business side, we don't use the term debt to income ratio. We use a term called debt service coverage ratio. That's debt service coverage ratio, DSCR. And sometimes we throw the R out and it's just debt service ratio, or DSR. And what DSR really is for every dollar that you have in debt service, And debt service is just a fancy way of saying debt payment. So any loans that you have out there and whatever the payment is, for every dollar of debt payment you have either existing now or there you're looking to take on. So you add them all up. For every dollar of debt service, you have at least $1.25 in excess cash flow. That's cash that's left over after you pay all your expenses. Yeah, your net operating income, as some banks call it. That $1.25 is kind of a baseline for you. That's going to be different on depending on the lender and other risks involved with the loan that you're trying to get. So, some SBA products will go down to $1.15, so 1.15 for every dollar of debt service. Sometimes they'll bump it up. Sometimes you need $1.50 for every dollar of debt service, right? But that's the term we use in business lending. And when you're looking for a loan, you have to be able to prove that your business makes the money now or is going to make the money now to repay that debt. It's obviously a very important factor. Any questions on capacity that we have out there, Karen?
No, but is there a personal credit score that you look at? They're going back a little bit in order to get better odds of being approved for a business credit for a new and starting business that may require a personal guarantee?
Yeah. So couple good things in that question. I love whoever asked that question. Thank you for asking that. A personal guarantee for a business credit. You will almost always have to personally guarantee a business loan or a business credit card or business auto loan. It's not going away until you're doing about $30 million in revenue, and you move up into like a middle market business banking space. You won't be able to avoid it. So in the small business space, you can always expect to personally guarantee the small business loan. It's just a thing. All right. As far as credit scores that you're shooting at, now this is not a minimum. Hopefully I'm answering the question correctly, but I'm shooting for a 750 credit score, me personally. If I can get up into the mid 700s, that's going to put me in a position to where I'm going to qualify. I'm going to get all the good interest. I'm going to get the good interest rates. I'm going to get the good terms. I'm going to get approved based on my credit. Like that's kind of the score that I'm shooting for, is the mid 700s. Like I said, minimum 680. But if you want to put yourself in a good situation, you want to be shooting for the mid 700s.
And I would just add to that.
Yeah.
Unfortunately, we have had clients in which they have very poor personal credit scores. I mean, low 600s, 500s. That is a huge issue when you're looking for a business credit approval.
Mm-hmm.
If a bank looks at you and says, listen, if you can't handle your personal credit, how are you going to handle your business credit? And that's just being brutally honest at this point. So if you are thinking of opening a business, if you want to open a business, please get your personal credit score in order first. And there are obviously various services out there that can help you. And one thing I will warn you on a personal credit, if you're ever late paying your mortgage, it's the death knell for your personal credit and for a bank, because if you can't pay your personal mortgage on a timely basis, you will have an issue getting any type of personal credit. But on the other side, if a lot of your personal credit issues are maybe health related, because obviously everybody understands sometimes billings and health are different, is obviously that could be something that someone would look at. So here's another question. Does you offer tips and advice to help get a higher personal credit score? Does Bank of America help doing that?
Yes, absolutely. So, You can connect with me one-on-one. I'll be sharing a QR code at the end of this too, for Better Money Habits, which is a lot of education on personal finances, including personal credit and ways to improve your personal credit. But yeah, if you want to meet one-on-one, again, you're not, there's no one too big or too small for me to work with. I do it for free. This is what I do, and this is what I love to do. And there, to Karen's point, and if your credit is trash out there and you've been through it, listen, I've been through it before. I won't go too deep, but when the crash happened in 2007, 2008, it was brutal for me and my family. So I went through my own challenges and had to do some things to revamp my credit. So there's a lot of good resources in our community that can help with this stuff. So be intentional, like lean into the space. I know it can be intimidating, but make it priority because it's something that you can change. If you have bad credit, you can change that. I promise.
And that person says thank you. And one last question, and we could try to move on, is
Yes.
are co-signers allowed if the business is a sole proprietorship?
Typically, no. Typically, no. Now, if that co-signer has something to do with the business and is working with the business, then we can talk. But typically, no, it's not like a vehicle where it's like, oh, well, your credit card, this person can vouch and we can go to them. Typically, they have to have some skin in the game in the business.
Okay, let's move
All right.
on.
We're gonna move on. We're gonna move on at a pretty quick rate because of time. All right. So I apologize that I must be really slow. The second C is capital. The bank they're gonna want to know, how much money that you've invested in the business already, right? Do you have any skin in the game? And if you're trying to purchase real estate or equipment, how much money are you bringing to the table, right? That's something that they look at. Also, another way to look at capital is, do you have any money to fall back on, any personal liquidity, any savings in case the business stops making money for a short period of time, right? So if you have personal liquidity or money in a personal savings account, that can help the loan request because it shows the bank that you have something to fall back on. The third C is collateral, right? Collateral is what the bank uses to secure the debt, meaning if you're unable to pay the loan back, the collateral is what we call a secondary source of repayment. Meaning, if it's a vehicle, the bank can come and repossess it and sell it to recoup some of their cost. It's not. Listen, the banks never like to repossess assets. It's not why they give the loans out. They want to just get paid on time. But it does help the deal having something to secure because there's something that they can turn to if the funds are not not received or not paid on the loan. Collateral out there, you could have commercial real estate, equipment. We talked about vehicles, even large accounts receivable can be used to secure a deal. But that's the third C. The fourth C are conditions. This could be market conditions, economy conditions, things that are going on, like, are we in a recession? Is the economy in a downturn? Are we in the middle of COVID, right? If we're in the middle of COVID and you have a restaurant, you're trying to start up a restaurant, that's going to be tough. That's a tough condition to overcome, right? So there are these conditions that are beyond your control as a business owner, but the bank is still going to consider. So if there are some risky conditions, market conditions, industry conditions, economy conditions that you know of as a business owner, you need to be able to speak to how you are going to navigate those risks. It would very common for an underwriter to ask a business owner, all right, you have this risky situation in your industry. How do you mitigate that risk? What do you do to make that risk as little as possible? Those are conditions. The fifth C is character. Karen talked about it. Personal credit. Personal credit is the backbone to all of the character. you need a good personal credit score. You just do. You need to focus on it. But your personal credit score, business credit score, all your experience in the industry, your experience as a business owner, um, all these are what we call character, and that's the fifth C that the banks are gonna look at and take into account. Then the sixth C that Bank of America has added is communication. Um, and that communication with a banker or a financial expert. Um, Someone that, I mean, I'm not talking about building a relationship with Bank of America or Wells Fargo. I'm talking about building a relationship with a Nick Correa or a John Doe, right? Like finding someone to start to build a relationship with that you can trust, that you can be vulnerable with and talk about where your business is and what your business priorities are and what your personal priorities are. So that financial expert can kind of help you prepare and navigate the waters. So I can't stress the importance of just having someone to have, some conversations with and building a relationship with to help you in your journey there. It's extremely important.
And the
Karen,
one
you can
thing
go.
I would add
Yeah.
is that, be honest with your banker. I worked in banking for 35 years in the past. And I truly appreciated the business people who had loans with us that came to us and said, hey, I have health issues. I have other issues. I may not be able to make my payment. Now, don't just disappear and don't make your loan payment. Talk to them, because those people are the ones we went out of our way and said, listen, rather than the $300 you owe us a month, how about you just make $50 a month? How about we just, whatever we make sense. If you work with the bank, they will work with you. And that's go back to having people like Nick or somebody else that that you could pick up the phone and say, hey, I have this issue. Can you help me? And you know what? Most banks will help you. But if you're not open and honest with them, that's when everything sort of goes sideways.
Yep. Thank you for that, Karen. The last thing I want to cover, go back real quick. Actually, no, we'll stay there. How the funds will be used. Now, go back. I'm sorry.
Mhm.
Right there. This is the last thing we can cover because this is so how the funds will be used. This is part of conditions, one of those 6 C's we just covered, how the funds will be used. You need to have a plan for the funds. So if you're looking, it can't just be like, I need $20,000 to start my business and I'm gonna use it all from whatever. Like you need to have a detailed plan for what you're going to use that money for. I need $10,000 because I'm gonna hire 3 people and it's gonna take 3 months to get the income coming in once I hire them, and this is gonna be the salary. So this is gonna be the breakdown, and this is how this is gonna work. Or I'm gonna invest this amount of money in marketing. It's gonna be $10,000. This is gonna pull in this many clients. So the how you're gonna use your funds is vital to the conditions part of the credit request. How much you're seeking and where the funds will be used. It's very important. That's that's it. The next slide. This isn't too important, Karen. I know we're running out of time. And then the next slide, the next couple slides, I think, are just kind of a recap of some of the 6 Cs. So I think that we kind of have we've pretty much covered everything that I think is really needed. If you go to that one right here, there's a couple QR codes. Great resources, everyone. So that first one, the small business resources, there are tools and information and articles to help you start, run, and grow your business, from HR, from managing HR to accessing capital to the finances of your business. There's a lot of great resources there. The second one is Better Money Habits. Um, Finance, mostly on the personal side, different education articles and tools on anything personal, how to save for a house, how to put a personal budget together, how to save to put a kid through college, different things that we all experience in our life journey on the personal financial health. Better Money Habits is a phenomenal resource. And then the last one is just the Academy at Bank of America. We do a lot of online and virtual webinars. And so you can always search to see what's coming up to see if there's a class that you want to attend. Other than that, again, my name is Nick Correa. I'm with Bank of America. Hopefully you guys got my contact information. You'll get the deck as well, but please feel free to reach out to me. I'm here to help, and regardless of your situation, there's typically something I can help with.
Well, thank you, Nick. And for those who joined late, you will be getting a copy of obviously this presentation as well as the recording. So you'll be able to get access to the obviously QR codes. And in the beginning of this presentation, we did have all of Nick's contact information. And just to wrap up, I know we're just a few minutes past time, and thank you for hanging in there because I see most of you are. This is our SCORE, our chapter in SCORE, as well as your local chapter. And I know some of you are not here obviously in the low country, but this is all available to you at this point. And obviously some person just said thank you, we appreciate your support, but we have other workshop series. Please just go on our website at the end of this and just say, here is some of the ones. We do a QuickBooks series every year. The next one is actually this Thursday. We're wrapping up with reporting and report customization. Goes back to what Nick just said. If you're getting ready for your tax return and or bank reporting, you will need this information. And we obviously review this as part of the QuickBooks information that we have at the end of the day. The other series that we have is also, we do an entire social media series. We're actually thrilled to have the next one, the November 30th, but is building a strategic approach to social media content. Social media content is very important because, as we all know, we all obviously have to get customers, and how do we get customers down nowadays is obviously through social media. Altamis, who is the owner of Ezer Agency, is wonderful, and highly encourage you to join us on that one. And lastly, we have next on December 7th is, some people don't understand, you really need to protect your names as well as anything that sometimes you do and anything you might build. So we have the next one is designs, provisionals, and patent protection. Doug Lineberry is a great attorney, and he's very funny, and he's very dry. So again, I recommend that. If you need a mentor, we talk about we're here in the low country, but just go on score.org and go and put in your zip code. All of the chapters, we have 220 chapters nationwide, 10,000 volunteers. You will find a mentor who can help you walk through many of the things we talked about that you need in order to obviously obtain bank financing and evaluate, are you ready for bank financing at the end of the day?
I'd like to get more people involved. All right.
And then if you want to volunteer for your local chapter, obviously be part of this. We are always looking for obviously people who want to help us and social media experts. And please follow us on all of our social media channels. We're on Facebook, Twitter, LinkedIn, Instagram, and the like. We do want to thank Bank of America. They have been our sponsor for years for the Veterans Workshop Series, and we're thrilled to have them. And without them, we wouldn't be able to do this presentation. And lastly, we are a resource partner of the SBA. So we are part